The world is undergoing a fundamental transformation. One country single-handedly changed the global economy after turning energy supplies into an economic weapon, as the need to switch from fossil fuels to more environmentally friendly, renewable energy sources became more pressing. Food costs have skyrocketed, worsening famine in developing nations and requiring businesses to adjust to long-lasting changes. Today, many top European countries are choking off natural gas supplies. But on the other hand, the Russian economy itself is shrinking. As a matter of fact, its GDP has been forecasted to decline by 2.5% in the worst-case scenario. Above all, this energy war can only end badly for Russia. Since the invasion of Ukraine in February of last year, Russian President Vladimir Putin has been riding high on his proclaimed energy authority and has effectively held the world economy hostage to his whims. In an effort to make it politically impossible for Europe to continue supporting Ukraine, Putin has cut off natural gas supplies to the continent since last summer. He did this in the hopes that cold-shivering Europeans would rise against their leaders. The potential threat was real. A staggering 83% of Russian gas exports to Europe in 2021. About half of Russia's government revenue comes from its total global exports of 7 million barrels of oil per day and 200 billion cubic meters of piped gas per year. Russia supplied 46% of Europe's total gas needs, and the continent also depended on it for a similar amount of its other goods, such as metals and fertilizer, from a global supply chain perspective. Now that we're getting up to the anniversary of Putin's invasion, it is clear that Russia has forever lost its financial standing in the world market. Putin's window of opportunity has gone without incident thanks to an unusually warm winter in Europe. And as we rightly predicted in October, Russia itself was the largest loser in Putin's gas gambit. It is certain that Putin will cause economic harm to European Union nations in the medium run. However, Russia will inevitably lose this energy battle. Putin's action will hasten his nation's energy sector's downfall and hasten the loss of its prized position as a global energy powerhouse. Three goals underlie Russia's energy weaponization strategy. The first strategy, which was used when the gas taps were still essentially open, was to sow doubt so that EU nations couldn't plan ahead. The second goal was to destroy the economies of Europe, and on that front, Russia's plan is succeeding. This explains why the Eurozone started experiencing recession towards the last quarter of 2022. Putin's final plan was to disseminate the disinformation that sanctions are to blame for the energy crisis in order to stoke political tensions in Europe. Of course, this is a case of cause and effect is reverse. The crisis is being brought on by Russia's intention to invade Ukraine. As the world, and most especially Europe, no longer requires Russian gas, Putin's natural gas advantage is now worthless. Europe quickly acquired substitute gas sources by switching to international liquefied natural gas, saving it from freezing to death. This includes an estimated 55 BCM from the United States, which is 2.5 times larger than LNG shipments from the United States to Europe during World War II. These alternative supplies, when combined with increases in supply from nuclear, renewable energy, and coal in the interval, have lowered Europe's reliance on Russian gas to 9% of its overall gas imports. In actuality, Europe currently buys more LNG than Russian gas ever did. Aside from the worst-case scenarios that were averted, Europe's exceptionally warm winter has allowed its full reservoirs to hardly be depleted and carry over into the upcoming winter. Germany's reservoirs were a record 91% filled in January, up from 54% the previous year, which means that Europe will need to buy a lot less gas in 2023 than it did in 2022. The ramifications are huge. With a guaranteed energy supply through at least 2024, Europe will have ample time to fully implement and operate more affordable alternative energy sources, including renewables and bridging fuels. Putin is currently making essentially no money from gas turnover, as his previous 150 BCM of pipeline gas sales to Europe have been switched out for a petty 16 BCM to China and meager global LNG sales, hardly enough to pay costs. Because China does not have the necessary pipeline capacity to take longer for at least 10 years and chooses domestic and varied sources of energy anyway, as well as because Russia's lagging technological advances make it challenging to scale the export of LNG beyond a slow trickle, Putin has no options for making up the 150 BCM shortcomings. Putin's influence over oil is also fading. The days when the worry that Putin might cut off the Russian oil supply drove oil prices to soar by 40% in only 2 weeks are long gone. In fact, oil prices dropped when Putin imposed an embargo on oil shipments to nations that adopted the price cap as a response to the G7 oil price caps launched last month. This is because it is clear that Russia's oil is no longer needed by the globe. As supply rises, the oil market is shifting in favor of buyers rather than sellers. This is more than enough to make up for any potential cutbacks in Russian crude production. Today, oil prices are now lower than they were prior to the war. And in just the second half of 2022, countries including the United States, Venezuela, Canada, and Brazil increased production by 4 million barrels per day. Any depleted Russian crude will be effortlessly and quickly supplied within a few weeks, since much more additional supply is anticipated this year. Furthermore, unlike last October, Putin is unable to force Saudi Arabia to step in and save the day by dramatically reducing OPEC Plus output quotas. That's because important transfers of technology and armaments from the United States to Saudi Arabia have been put on hold due to increased scrutiny of OPEC Plus's huge excess capacity. The G7 price cap forces Putin to make a lose-lose decision that weakens Russia's position in the energy market as well as his influence. Although India is buying 33 times more Russian oil than it did a year ago, Russia is not making much money given its $44 break-even cost of production plus more expensive public transportation because China and India are using the cap to drive a hard bargain with Russia without formally participating in it. However, if Putin reduces production even further, as he has promised to do, he will lose a crucial portion of the oil market, a goal of his for a long time, in the midst of an oil glut, and further reduce his personal income at a time when he is already cash-strapped. Even Putin's other commodity cards have been completely played. His scheme to transform food into a weapon utterly failed when even his ostensible allies turned against him. And in markets for particular metals, where Russia has traditionally held a dominant position, such as nickel, palladium, and titanium, the fear of blackmail among purchasers and higher prices have accelerated reshoring and rekindled dormant public and private investment in crucial mining and supply chain projects for minerals. There are many untapped mineral reserves in North, South, and Africa, where these are primarily located. In reality, the output of all new mines expected to open in the next 2 years will be more than sufficient to permanently replace Russian metals in global supply chains in a number of key metals markets, such as cobalt and nickel. Another set of errors by Putin to add to a growing list, already including his underestimates of the Ukrainian people and the collective might and will of the West, are his failed economic bets. Putin's botched energy and economic war has obviously had repercussions. Consumers continue to feel the squeeze of increased costs as the current lower prices take some time to spread across the economy. But then, the ripples have affected many lives, modified supply chains, and altered trade flows. Above all, what counts is that the finish line is in sight. Putin has irreparably damaged Russia's most potent hand, its ability to produce energy and commodities, making it impossible for Russia to ever again be in a position to wreak such havoc on the world economy. On the battlefield, the conflict continues, but there's still hope for success on the economic front. Nevertheless, the story never ends. But if this notion is feasible, how do you think Russia will stay relevant in this war for economic control? We'd love to know your thoughts in the comments section. If you enjoyed this video, make sure you click the like and subscribe buttons. Most importantly, don't forget to click the bell icons to be notified when a new video is uploaded. Also, feel free to leave a comment if you have any recommendations for videos. Have a great day, everyone, and thanks once again.